What's up guys, welcome back to my video. Today we're going to go over the easiest strategy that you could use to get funded with ICT. You could use this on Forex, futures, whatever. I'll make it so you can swing with this and you can scalp with it. And it's only 3 steps, super easy. We're going to go straight into it. So we're going to look at the daily bias and not to give us where the drawn liquidity is, because like I can see the price could go over here, but we're going to use it for just for discount and premium. That's what we're going to be doing. So we're going to be marking a fib from an impulse range. So you see this high, it came and took out this low right here, and we had some displacement. So I marked this high to low as my discount and premium zone. And you could obviously do something like this. You can see where the discount is, or the market structure, or the displacement is, and boom, right here you have you'll be looking for shorts in the premium, and you'll be looking for longs in the discount. And I'll mark it from over here, so just for you guys can have some examples. Something like this displacement, you'll be bearish here, you'll be bullish here. And I'll just quickly show you guys where I'll put my fibs, just so no one, just basically look at this and then copy it on your own. Like over here, this is just a retracement into the zone until we break this high, which we do right here. You see, you could do here to here. This gives you'll be bullish under here, bearish above here. So this just gives you, like, you use this swing right here too. Boom. Bearish, bullish. So now that you guys got that, we're going to go to step 2. Alright guys, so we're back. Here we have step 2, displacement versus liquidity sweep. So if you guys peep right here, we're first going to talk about displacement. So you notice how price came above this high right here, and we displaced above with 3 candles of energetic movement. But things get interesting when you go to the next level. You go to this level, you could tell that there was no displacement to go above this high. There was no energetic moving away. And I'll show you displacement again. Displacement is right here. Energetic move below the low. Right here, there is a, oops, sorry guys. Alright, technical difficulties. Alright, boom. There is no energetic move above this high. So this is liquidity sweep, and then the other one right here is displacement. So you just go over your charts and just see what what you can find. I'll go over some examples. So right here, liquidity sweep, we come, grab it, we move away, and I'll obviously show you some displacement. Displacement right here, boom. And when we got that displacement and then we have that retracement, a lot of times we'll come and try and take out this high. And I'll show you again, like look right here. We have that displacement, we make this low, we retrace, and then this is the target to come and continue. And we also have, so displacement, liquidity sweeps aren't only with wicks. Here we have a candle body going below, but no real huge candle going through. And I also want to show you guys that this could be a liquidity sweep, because one candle doesn't count as displacement in my book. It has to have multiple candles. Yeah, so this move isn't really displacement, but how are we breaking below lows? That's how you figure out this displacement versus liquidity sweep. Right here, we broke below this low, we made another down candle, we're making more down candles, so it looks like what is in the liquidity sweep, it might be targeting over here. You could also check right here. Yeah, too many down candles. If it does make a big up candle right here, then you could classify this as liquidity sweep. So why did I say if it goes above here, you will get like basically it'll classify as liquidity sweep? Because we're gonna go over step 2.5, change in the state of delivery. Change in the state of delivery is simply when in a downtrend, when we take when we close above a down candle, it's a change in the state of delivery for bullishness. So here is access support, boom, boom, pushes up, and then a bearish scenario will be something like this. Notice how we close above this liquidity, and on this one we closed above, or we closed below the liquidity right here. So step one. So here we have market closing above the highs, and then we have here market closing below the lows. So when we take the high right here, when we take the high, basically that changes the state of delivery. We have to close above the high. Right here, when we close below the low, that changes the state of delivery. But yeah, that's basically changing the state of delivery, is those two simple steps. So step one, closing above. Step two, closing below. And this becomes a bearish order block, comes, respects it. And basically I'm showing you guys this because if you put this with the liquidity sweep and displacement logic, this shows you when prices look into reverse. So if we close above a liquidity point with no real displacement, now we make this CSD, it's extra confluence that you're on the right side of the trade. And if it's still in your premium zone, like this is that extra high probability setup. So we're going to go into step 3 for the overall model, and this will be the end of the video. Alright guys, so for step 3, we're basically going to do all the steps in one, just quickly. So this is my impulse range. You can even do this right here. So if we go, you see we're in discount, so we're going to be bullish. We don't care. Price grab this liquidity. We're just going to play with our model. And now we can go into the 15-minute. And in the 15-minute, we want to see price take out a low, which is basically step number 2. Take out a low without displacement. So we're going to skip to New York time zone. So boom, price takes out a low without displacement to the downside. This is looking good. So now we also take out another low right here, but that wasn't during our New York time zone, so we're going to wait. See if price takes out another low. So we took out another low with no displacement. Alright, so we took this price out. Now we want price to like close above and make that CSD right here. So we want price to close above the highs to confirm the CSD. Cool, so we confirm the CSD right here, and now we go to the 5-minute, and this is step 3. We look for a market structure shift. Here we have a market structure shift. High, high, we broke it with fair value gap. That's a market structure shift. And we do a 1 to 2, and that'll be the trading plan. So just to reiterate, basically on the 15-minute, for step number 2, on the 15-minute and 1 hour, you could look for the liquidity sweeps. And then after the liquidity sweep occurs in your time zone that you're trading on, the kill zone, you'll basically go to the 5-minute, and then you'll look for a trade. Here we have price taken out, taking our TP, and I'll quickly go over the rules. I'll draw it right here for you guys. Alright guys, so I'm gonna quickly show you guys what I mean here. When we go back to the daily, here we could see that price is in that daily range from high to low. So basically the impulse moves. This premium is bearish, and you're bullish and discount. Now we come back, and then on the 15-minute, you'd want to see a sweep. So right here, no displacement below or above a swing on the 1 hour or 15-minute. So since we're bullish here, we'll be looking for a swing to the upside. So we're going to look for in the 15-minute or the 1 hour for a low, and then we can use the CSD technique to confirm no displacement. And if you get a wick, that's even cool. That's cool. The reason this didn't play out is because it wasn't in my kill zone, and sometimes these trades don't play out. You know what I'm saying? Sometimes you don't make money on these trades. It's just the way of trading. And then step 3 is a market structure shift. Market structure shift with fair value gap left untapped. So here we have that fair value gap, market structure shift. We come in and we do a 1 to 2. 1 to 2 preferred. 1 to 2. And I like to do 1 trade a day. So yeah, I hope you guys learned something, and I hope this was fast for you guys, and I hope you can go back and just see how this looks like in the charts. The most important steps is, all these are more important, but really solidify yourself. Like if you're in discount, you're looking for lows to not be displaced. If you're in premium, you're looking for highs to not be displaced. And then you go in the market structure shift. You look for a market structure shift after there's no displacement, and then with fair value gap, preferably you want a nice impulse, not just a small market structure shift like this or this. This is a small market structure shift. No real fair value gaps are left. You want something huge, like right here. Boom, market structure shift. This is a low. This is a low. A lot of fair value gaps left. Fair value gap right here. Fair value gap right here. You can enter in this fair value gap and hold, if you really want to. This is a swing trading. This is a scalping. This is everything that you want in a strategy, and the only strategy you need to get funded. But like and subscribe, guys. This is Jelly Trades, and yeah, I'm out of here, man.